FX. Good morning, good afternoon, good evening, or good night, no matter where you are. Hopefully, you guys out there are earning a lot of money from the market, and also take good care of your own health. All right. So don't let COVID influence your life. All right. Don't let it ruin your life. Let's fight COVID. All right, out of our life. So a brief I'll say a brief recap of what we learned in the previous episode. So we learned about fake out. All right. So I've introduced to you the fake out version 1 and the fake out version 2. All right. It's version 2. So briefly, the version 1 is something like this. All right. So usually it only occurs at QML late retest. Right. I stress it, late retest. So what does a fake out really give us is actually is a type of confirmation. So if I have a lot of fake out, it might happen 2 layer of fake out too. All right, it might happens with 2 layer of fake out. So the more fake out is, the more high possibility the trade will gonna get into your MPL before the big drop. All right, sometimes it might be a small drop, but it depends on how you look at it. All right, so the buy version is something like this. All right, it's exactly the same, just that we flip the chart over. Then, of course, we have the fake out version 2. All right, fake out version 2, where there is this is what we call as a decision point and an MPL. All right, where the price is moving in a range before it has a stop hunt and punch down. Then the price return again, knock out, how should I say, going against the previous support, which has become a resistance. That's why it's SR flip. All right, it's SR flip, and it will sell over here. This is your point of selling. All right, take a look at the buy position. And of course, I have to brag a bit. Please give me a chance to brag a bit. All right. So after I post the video on the fake out, so it coincidentally it happens to have a big fake out QML at Go. All right, XAUUSD over here. So I already post this how should I say this trade in my Facebook. But I'm going to explain it so that a lot more know how to enter the trade and understand how does the trade works. All right. So if you look at it properly, the price over here, all right, the price over here, right, from this range start onwards, all right, is making a low, high, lower low, lower high, lower low. So you have your QML at this point. This is your QML. All right. So you just be patient with me. All right, you will learn a few tips. So one tips over here is that a lot of people say that, hey, I should enter at after the QML. All right, I should enter after QML, because how you define the QML, sometimes you define it at the body, sometimes some people define at the wick. It does not matter for me, because QML to me is just an indication that the price is going to reverse. That's it. That is not important. So this is my QML, and if you enter at the wick, you already miss out this good, nice big trade. All right. So what happened was that the price went up. It breaks everything. Breaks not only one high, two high, but all the high all the way, and it comes down and play about this area for few days. All right, because this is a daily chart, few days. And before, I believe it's because of the news of FOMC. All right, FOMC news. My time is midnight. I didn't monitor anything about it, and I already have my pending order over here. And I'm gonna tell you how I managed to catch a 1 to 20, I think 26 risk reward trade. Right, excellent trade for me. But that is not the point. The point is that the entry. If you look at how I got my entry, you'll be amazed. All right. So this is my QML. This is my ultimate lower low. Right. Let me do a labeling so that everyone will understand. Right. So this is my lower low. So ultimately, if you look at it, let's look using a normal zone point of view. There is only one fresh zone here left. So this is my fresh zone. Right. Hopefully you guys do agree with me. And how I define my zone is another case. All right. Different from other YouTuber and other mentor, maybe. I don't know. So this is how I define my zone, and this no zone left except for here. and this one. But which is my really MPL? For that, I need to go into lower time frame, such as H1 or H4 or maybe M30. So I'll go into this area and take a look. So what can I see is that if you look at it properly, there is a lot of rejection over this place, right? Let's go slowly. There is a lot of rejection over this place onwards, all right? Right? For a lot of people, they might have difficulty of identifying the MPL, all right? But it needs time for you to practice, all right? It needs times for you to practice. So this is a very, very strong rejection point. So you can see the price keep rejecting along this line, all right? A very strong rejection. So this is my, wait a minute, okay, this is my MPL, maximum pain level. All right, maximum pain level, it is over here. All right, then what happened was that I switched it back to my, all right, let me see. Okay, sorry, I switched it to M30 first, right? M30. Why I need to switch it to M30? Because this is, I give you another tips here. I will give you a lot of tips of trading. I like to trade the gold only, mainly on gold. And how should I say? My favorite time frame for gold is H4, M30, and M5. All right. So over here, this zone, if you see that I do not move my box around, I don't move my box around. I will just minimize my box. I will just make it smaller and smaller. So over here, we only have one fresh zone left, right? That is here. That is this. This is my zone. This is my zone, right? This is my zone. This is my entry point because this is my MPL and the zone below the MPL for a buy. I already repeated it previously many times in my video at last episode. So now let me switch it back to daily chart. All right, let's switch to daily chart and see what actually happens. All right, what actually happens. Let's analyze it and learn together. So we have a lot of very nice fake out. We have a lot of very nice fake out. So over here we have this fake out. All right. Let me get the line straight. We have this fake out. So some people might categorize this as a SR flip. Yes, it can be also. It can be. You can see there is a lot of rejection along this line. So this is a manipulation. Maybe I switch to H4. It's easier for you to see. This is a manipulation for how should I say, for big bang, big traders, all right, to get you guys into trade. How should I say, trick you guys into getting buy trade early, all right, early. But where did I get into my entry? This is where I enter my trade. You can see how precise my entry is. So I was I would say that even myself, I was shocked. I was shocked because it happens, like I told you, midnight. You can see the time is 3 a.m. in the morning, and I'm not those kind of people who will wake up early in the morning just to trade the FOMC. No, I will just put a pending order, all right, in this case. And what happens is that when I woke up, it's already gone 400 over pips, all right, 400 over pips, which I was so surprised of, right? Yes, gone 500 over pips, but when I woke up, when I saw it, it's already 500 over pips, all right, 500 over pips, sorry, 420 over pips, something around there. So where did I took my profit? I explain a bit. Where do I took my profit? So very simple. Along this stress of line up, because now I'm using, like I told you, my favorite time frame is H4. There is a lot of we call it the roadblock. Right? For me, it's a roadblock. I need to monitor throughout this roadblock, and of course, I'm using Trading View, which I can set my alarm. So when the price reach that area, I will monitor what is the power, all right, the candlestick, how powerful the candle is, or how the price approach this area. So here we have one roadblock itself. Previously over here we have one roadblock. Then we have another one over here, right? Another one over here. Then we have this big one over here. All right, we have this big one over here. All right. So where do I took my profit? Of course, how I enter is how I exit is how I enter, and how I enter is how I exit is exactly the same, right? So what happens is that when I woke up, it's already gone through 2 roadblocks. All right, good for me. I'm not there to monitor all these things. So it happens to approaching this area. So approaching this area. So I go into M30. I'm not those kind of person who is very, very greedy. I'm just able to, how should I say, I'm very satisfied with whatever I can get my hand on. Then I am very, very happy about it. Right? I'm very, very happy about it. So if I switch it to M30, there's a lot of this kind of funny, funny things. Right? Funny, funny things. So it's okay. Maybe it approach here. All right. So I monitor the price. So when the price reach this area, it does not have any sign of weaknesses on the currency, the how should I say, the bullishness of this candle. So I monitor all the way until I saw this big drop. All right, this big drop really scared me out a bit. Then eventually, if you look at it properly, this is another QML. All right, another QML in a smaller time frame. So what I did is that I just exit. All right, I just exit over here. Coincidentally with my zone, this is my zone. So I exit it over here. End of the story. So end of the day, how much did I read? I mean, what is the risk reward that I get? I was amazed, even myself, right? It's around 120 something. Oh, sorry, 1 to 18. 1 to 18. All right, so it's okay. 1 to 18, 1 to 19. So this is not the important. The important is how I enter and see how precise it is. So this is a satisfaction that I need to brag about. All right, so let's continue with the lesson today. Today I'm going to teach you about diamond. So what is a diamond? All right, so let's continue with the third type of fake out, the version 3 fake out. So this is actually a prevention. It's also a prevention for a lot of people. A lot of people do not understand what is a diamond. So let me explain it, and I'll give you a few examples, maybe 2 or 3 examples, so that it will clear your mind, you will understand more. So first of all, we have a normal QML, and of course we identify our MPL and our decision point, the zone of entry first. So this is the first thing that we need to do. Then what happens is that we have our fake out. All right, the version 1 type of fake out, we have R1, R2. All right, example here is R1, R2. Then come these important things. We have the third R. All right, so the price went up into this area. All right, and it rejects. All right, it rejects, giving a lot of people how should I say, a fake hope that this is a QML setup itself. All right, this is a QML setup itself. So usually what I do is that whenever there's a QML, I will usually put a line, all right, a horizontal line at the highest point or the lowest point, if it's another way around. Then I will see, is that coincide with any fake out. If there is any fake out, I will ignore this how should I say, this QML, and I will find the real entry. I will find the real entry. Sometimes we don't notice this one. It might be in a higher time frame. We don't notice this. Sometimes we just notice this thing because there is too many time frame. Maybe we are looking at 1H1, and this happens in a weekly or maybe daily chart. So what is a diamond? Diamond is a fake QML. All right, hear me out. Fake QML, where the head, the tip, the head of it coincide with other fake out. All right, other type of fake out. Then what happens is that the price will ignore this QML. It will reach to the point where the real QML, the big one, all right, before it goes down. All right, so this is a precautious, right? And this is what we call it as a diamond. It looks like a diamond. All right, that I mean, before I learned about QML, I learned about other things like a pattern. A lot of people will call this as a wedge. Is it? I think wedge, convert wedge, or maybe if you learn about Elliott wave, this is maybe the fifth wave, something like that. The wave number 5, all right. I already forgotten what is Elliott wave because too confusing. All right. So names does not matter. All right, does not matter the name as long you understand the concept. If you are learning from me, I mean, hearing my sharing of my knowledge, uh, these things will help you out. Will prevent a lot of lost trade. And a lot of people will ask, how come my QML does not work? How come my QML does not work? You have to ask yourself, is it a diamond setup? All right, so now I'm going to jump into the chart and give you a few examples so that you guys will diamond. All right, a perfect example of a diamond. So let's assume that you are looking at a CHF JPY M15 chart. All right, and then you came across this thing. Right, you came across this thing. You see that the price is moving high, high, higher, low, high, high, higher, low. It does not break the first time. Then suddenly it broke the second time. Then you think to yourself, wow, this is an example of, it's a very, very perfect QML, right? It's a very perfect QML because you have everything, your QMS over here, a lot of things, blah, 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 blah. All right, your MPL, whatever. So you might enter here for a sell or might enter here for a sell. It depends on you. But what happens is that the price ignore everything and it shot up. All right, you see that the price ignore everything and it shot up. So this itself is a diamond. So if you look at it, this itself is a diamond. So later I'm going to draw the diamond shape up. So what really happening over here is that I will usually put a line. All right, I'll put a line right here. And I'll see does it collide with any other head. So does it? You reply yourself. Does it collide with other head? It definitely does. All right, it definitely does. So this itself is actually a diamond fake out version 3. Right, the fake out version 3 diamond. We have a lot of rejection. Right. So where is the real entry point? Right, where is the real entry point? So we look at it properly, we see that the price came to this area and then it have another fake out. It have another fake out. All right, very, very obvious fake out over here. All right, it has a very obvious fake out before the price go into the zone upstairs and then go down. Then how do I usually backtest? I will just put a line over here. I see what happens and where does it really react. All right, where does it really react to? You can see that this area is actually very, very sensitive. Very, 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 how should I say? A lot of rejection, too many rejection, and this is a very fake, all right, fake diamond. It happens not once, but twice also. You can see it happens twice. So where does it really react? If you look at it, this area, this whole area, it reacts at this whole area, this whole zone here. All right, so maybe it is a zone H1 zone or M30 zone because this itself is a QML. All right, and this is the area where the price went up before plunge down and breaks the previous low over here. All right, can you see it? The price went up before it goes down. All right, it makes a lot of funny things. So this whole thing over here is a very good example of a diamond. So your diamond shape will look something like this. It may not be perfect, but nevertheless, it is a diamond setup. So you can see the price went down. All right. So this is the first example of a diamond setup that it can make you broke. All right. It may make you broke or it may make you rich. Very quickly, we have come to the second example of a diamond setup. So let's assume that you're looking at a British Pound USD H1 chart. Then what happens is that you can see the price is breaking high all the way. All right, breaking high all the way until this point before it came down. All right, before it came down and making a QML setup over here. QML setup over here. So you might enter here, all right, this area, or you might enter this area. All right. So that it did react a bit for now before it continues. Later I'll show you what happened. So what is the prevention? Very simple. Like what I did previously, I put a line at the head. All right, a line ahead. and see whether does it collide with any rejection or not. Yes, it does. All right, it does along this way. It does. It have 1, 2, 3. All right, now of course this is the later one, the last diamond setup also, the fourth. So this is all one big diamond, and this is a smaller type of diamond. All right, this is the thing that you need to be precautious about. All right, this is a fake out. All right, let's switch it to H4 chart again, and then you see that. All right, you can see that it's very obvious, this diamond over here, and this is for the smaller time frame, even smaller time frame. So what is supposed to be reacting is, if you look at it properly, the price is actually moving up and then come down, and all these are all fake out. It's actually reacting to this area. All right, this area over here. So let me get. All right, let's learn together. Let's learn together. All right. All right. Where's my time? All right, so over here. So you can see that the price rejects. All right, all this, ignore all this diamond before it went up. All right, hunt stop loss and goes down, and it reacts at this zone over here, around this zone over here. All right, somewhere around here, or maybe make it bigger. Yeah. So around this zone, it reacted at this zone because this is the final QML. All right, final QML. So this is a diamond, two diamond, one big diamond and one small diamond. Always counter check with a horizontal line whether does it collide with any of the other fake out. All right, very, 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 you see, I stress it out, important. All right, so this is the two example of a diamond setup or a diamond precautious thing that you need to prevent. It depends on you. All right, so hopefully you guys enjoy this episode of video about a diamond. Why I make it purposely make it another episode is because I need to explain and give you a few more example. Then of course, if you guys like the videos that I did for you, please do give me a thumbs up and like, and of course definitely subscribe to it so that you won't miss out the next episode. A lot of people will love it. That is the compression, right? It's another type of price action for the